Should we buy or sell the banned protocol? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So the ticker name is banned/USD. Here is their website. Secure, scalable, blockchain agnostic, decentralized Oracle. So quite a mouthful. Band Protocol is a cross-chain data oracle platform that aggregates and connects real-world data and APIs to smart contracts. Yeah, I mean, they certainly would. It wouldn't hurt them to get someone to rewrite these things to make it a bit more clear. I think that the key thing that a lot of these crypto projects need to think about is that it's most important to get the non-techies on board. So quick access to our products, data provider platform, IBC bridges, band standard dataset. Yeah. So this is definitively one of the. It's an interesting project. It doesn't get as much attention as various others, but let's jump into the chart here. So we start here with the weekly data points. So when we look at the big picture, we can certainly see that this is a rather volatile pair. Huge rallies, huge sell-offs, and you could certainly make a case that we have something that looks very head and shoulder-ish. So you got a massive left shoulder, massive head, and a massive right shoulder. That is not a bullish technical pattern. The thing is that when you have a monster head and shoulder like this, there's quite a few times where it doesn't play itself out in that classical sense, because if this head and shoulders were to play itself out, it would be, if we were to get like a measured move, it would be just cataclysmic. So that is just something to be aware of when it comes to any technical pattern. The more dramatic the ramifications of the pattern is, the lower the probability that it will play itself out. But if, as an example, we had like a small head and shoulders pattern, then the odds of, well, that was not that clean, but if we do it like this, like a small head and shoulders pattern has a far higher probability of playing itself out because it is easier to play itself out. It's a higher frequency events. But monster head and shoulders, they are far more rare and takes a lot of doom to actually manifest itself. If we look at the daily data points, we have seen a very substantial rally. So one of the reasons why this one popped up on my radar is that when we look at weekly data points here, looking at RSI, we are a bit in a danger zone. We have certainly been higher in the past. Yeah, but we are now in a situation where we are emerging from lower highs and lower lows, which is the very definition of a downtrend. When we go here to the daily data points, we see that the current daily RSI is very dangerous for the bulls. The previous time we had this current RSI level that is back here, and then we did initially get a pullback. Let's measure the size of that pullback. So from this high to this low, yeah, we are going beyond 20%, and that's a pretty substantial pullback. In that case, we did actually go higher before we had a rather spectacular, minus 61% crash. So this is just a dangerous territory in terms of RSI. During this super rally, we did actually go much higher on RSI and also on the 20, 50, 100, and 200 daily moving average PPOs. If we look at the current situation in vis-a-vis the 20 daily moving average PPO and also the green 50-day moving average, this is risky territory. It just is. The red 200-day moving average is also negative, pointing downwards, which means that we are almost guaranteed to meet it. We do see that back here, it did form a very key resistance level. So it's a very high probability that will also happen again. So let's write down some notes. So I think that R overbought RSI and also PPO, especially here on the dailies. So I think that's the key event at the moment. So in terms of the technicals, yes, there have been times in the past where we were more overbought, meaning the bulls had more momentum. But given that we are in the context of lower highs and lower lows, I think that it makes most sense to give this one here to the bears. Looking at the seasonality here to the right, we simply do not get any data. To the left, we do have data for the last 3 years. We do see that April is a very strong month with an average 89% gain. Obviously, that is very, very bullish. The problem is that we only have 3 years of data, so we have to be rather careful about jumping to conclusions. But I think so. Even if we had like 10 years of data, then I would give this seasonality maybe even an 8 to the bulls, because it's so strong. But given that we have so few years, I will only give it a 2, but that is simply because of that. But yeah, the seasonality is bullish. I don't think there are fundamentals when it comes to cryptos. At least there's very few fundamentals, if any, that have an actual effect on the price of the cryptocurrencies. So I'm just going to skip it and jump right into relative performance. Here are the long-term correlations, and we do not have any long-term correlations. Looking at the daily data points, we do have 63% positive correlation with the S&P 500. We have 95% with Bitcoin, minus 44% with gold, and minus 61% with the dollar index. So Bitcoin is very likely going to have an effect on band protocol. So let's get the Bitcoin index and do a technical analysis of Bitcoin. So Bitcoin has seen a good rally. In this case, we have been able to clear a bunch of moving average resistance levels, like the purple 20-week and the green 50-week moving average. We also have a bit of a buy signal here on the MACD. So this is looking good. There's a lot of improvement here for Bitcoin. When we jump here to the daily data points, we do see that we are currently contending with a very important moving average resistance level. So let me draw that in. So we have the all-important red 200-day moving average. You see that it is very clearly a level that the bears are using to put on short positions. Beyond that, you see here that when we tested the 200 daily moving average, we were rather overbought here on the RSI. So we were in this danger territory. That is not good, because it simply just emboldens the bears. Also, the distance from the purple 20, green 50-day moving average, and to a certain extent the blue 100 daily moving average was also at levels that were risky based on the history. Meaning, when people look at these indicators, you have a situation where the bulls are just going to get a bit spooked, which we don't want. Well, at least if you are on the bull team. So yeah, it's just very important to just be aware of how these technical indicators have a psychological effect on the people who either press buy or sell. So yeah, but anyway, I think that the Bitcoin it has made some decent progress. Though I must be a bit critical of this move. I don't think this was a good idea. It was a very low probability event that we were to break out above such a key resistance level in the context of just being overbought. So it was just a very cocky move. Here is the relationship between band protocol and Bitcoin. So you do see that the band protocol, it massively outperformed Bitcoin here in autumn 2020, but then it completely fell apart, and we have seen lower highs and lower lows rather systematically. Even recently as well, you can quite clearly see that these lows are just lower, and also these highs, well, at least these recent highs are lower, but you could make, a clear case that this recent high, if we close here and we still have some hours left of this week, if we do close here, then we will have a somewhat higher high. Though the wick here of this week, it was higher than we currently have now. But yeah, it would be some slight improvement in this pair, at least. Let's see if we do get some seasonality data. No, we don't. Okay, so next we will look at the relationship here between Bitcoin and, yeah, I think we will. So here is the relationship between Bitcoin and gold. So we do see that we are currently emerging from a horizontal support zone. So let me just draw a fat arrow. Okay, that was very big, but you see that there's something going on here. And this is an interesting move. Let's look a bit at the seasonality. So we do see that in green over the last 5 and in blue over the last 7 years, we tend to see Bitcoin outperform gold a bit here heading towards early April, but then we do see that Bitcoin actually underperforms gold systematically into July. So let's just quickly also look at the relationship here with the dollar index, UUP. We use the dollar index ETF, and we first go to the weekly data points. Yeah, here we see a chart that certainly looks similar to what we saw with gold. Let's go to the daily data points. Yeah, so in terms of the seasonality here, we do get a rather similar finding. Yes, there is a tendency for Bitcoin to outperform a bit here heading towards early April, but then it does underperform here towards July. So given that we do have a strong correlation with Bitcoin, and we do see that Bitcoin, in terms of the seasonality and these relative performance charts, there was something a bit bearish though into vis-a-vis gold and also the US dollar. So I do think I will give this one to the bears, not in like a dramatic way, but yeah, I think I will give them a 3. So we do end up with a score of minus 1.7. So the data here, it is more favorable to bearish trades than bullish. A key part here of the bearish thesis is definitively the overbought RSI and yeah, the PPO levels. We have gone up, a bit too much, too fast. So the odds are pretty high that the bears will be able to use this as a reason to put the downwards pressure on the price. Band protocol, it needs a very significant catalyst to be able to just power higher. Of course, just because we have overbought readings, it doesn't mean that it's destined to crash. Overbought readings, they can be resolved by going sideways as well. So that's also a potentiality. But yeah, whatever you do, of course, you want to use stops and be market neutral.